Hello everyone. If you want to go to my free course, type henry-ward.co.uk into Google, then go to Henry Ward Trading, and then this here is my free course. Click on Start Today. If you want to go on to the webinars that I do every Sunday and every Wednesday, click on Trading Academy and then click on Start Today. So this is the Trading Academy. This is the full training, the webinars, direct access to me, everything that you want. On the chat, I put up a photograph of this particular setup and asked, is this a valid setup, yes or no? So before I'm gonna go into the setup here. So the setup here is short of this high test bar here. So we have this high test bar, and I have this sort of light blue horizontal level. So with the high test there, entry is below it and stop loss is above it. So the question was, is this trade valid? Now I'm going to zoom out and give you a little look at that horizontal level. So we have a touch here. I'll get the drawing tool. We have a bounce here. We have a bounce here. We have a bounce here. Sorry, wrong level. Come on, Henry. So we have a bounce here, a bounce here, a bounce here, and a bounce there. So looking at this sort of bounce and retest, okay? So this here is support, and then this is, sorry, this is resistance, and then this is support. Do we think that that is a decent level? Do we think that's a place where we should be potentially placing a trade? Do we think that is something that we should be placing? So looking at the levels, looking at what we have there. I'm going to clear all that drawings. Once I go back, I'm going to have a look at the trade again. So we now know there's 4 touches on that level. So we have a break there, break, 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 and now it's touched it again. So this is our 5th touch on that level. So do we think that this will continue going down? Or do we think that this upper momentum is too strong and it's going to continue going? Which one do we expect to happen here? Which of the two? Which one is most likely to happen? Come on, don't be afraid to share. Okay, so most people are saying down. So most people are saying down. One or two have said go up, but most people are expecting this to go down. Well, when we have the overall trend is down. So we would expect this as an overall trend to continue going down. Okay. The question we have is whether this level is strong enough to hold it or not. That is basically all it is. It's whether this level here is strong enough to hold, yes or no. Second question, I suppose, is the market here strong enough for it to continue going up. Now it may well go back up into this section here and then drop. So we'd expect the market to continue dropping, but whether it's at this point or this. And the answer to that is we actually have no idea. No idea which one of these levels the market will actually reject at. All we can do is, at these sort of levels, take a trade and see if it pays off. This trade here, some of you guys took it, some got stopped out here because of the stop loss, and some had their stop loss a little bit higher and actually had a 3-to-1 winner out of that. So is this level valid? Absolutely. Is it a high probability trade? I would say yes. Why? Because we have the overall trend coming down. We've had lower highs, lower lows. We've come back to a horizontal level. And I'm pretty sure also we have some sort of a Fibonacci at that level as well, if I'm not mistaken. $61.8 as well, sitting nicely on that level. So we have a Fibonacci level there as well. Now, Fibonacci levels for me, they're very hit and miss. Why? Because they tell me exactly what I know already. But again, we have another confluence there. So the idea here is that if you're happy, if this is something that meets your rules, then you take the trade. If it doesn't, then you don't. And that's why I put it up on the group, because this meets most of the rules. Now, again, you can't guarantee whether there's going to be a winner or a loser. But remember, trading is about probability. And is probability weighted in our favor in this particular trade? Yes, it is. But before we go and have a look at take this trade, we also have to have a quick look at the likes of the S&P and the Dow as well, just to make sure what's going on before we take this trade. So if we have a look at the S&P, now the S&P has almost come back to this level as well. If you were looking to take this on the S&P as a short position, so just say you were looking to short it at that level there, you would have to put your stop loss above that level there. So if you were shorting this on the S&P, you would have to put your stop loss above that level. So the idea would be, is this in a decent enough area as well for it to go down? Yes, it is. Yesterday's bar is an inside bar. Well, it's actually made a lower low, so it's not actually an inside bar. So yesterday's bar is a little bit bullish, but it's the futures market. So it's not actually the real market at the moment. We're not quite back at the trend line, so there may be some more upside. And then the Dow. And the Dow is nowhere near the trend line. And the Dow is also nowhere near a horizontal. So the S&P agrees, but the Dow doesn't. Okay, so the Dow still has loads of room to the upside. So then you have to take that into consideration as well. So 2 out of 3 have given us a trade setup, where the third one is not. Again, it's never ever going to be perfect. Now, what we could do here is have a quick look at the top 5 or 6 market cap stocks and see what they're doing. Now, if we look at Apple. Apple is slightly up on the pre-market. We had a selling day yesterday. Apple is slightly up in the pre-market. Facebook, again, slightly up on the pre-market. Amazon, slightly up on the pre-market. Microsoft, slightly up again. Google, a little more up than the other ones. Netflix, barely up. Tesla, a few dollars up. Lululemon, slightly up as well. Okay, so it looks like the market is slightly up across the pre-market. Moderna is slightly down. So that would go hand in hand with what the Nasdaq is saying here, that it's slightly up on the futures market. But it'll be interesting to see how far up this will go, or will it hit that level again? Will it go up double top and then come back down? Or will it just smash to that level and there's much more buyers in the market than sellers? That's one of the things we have to be aware of, is that this market will turn around. Bear with me. This market will turn around. It's whether it will turn around right here, or do we expect a little more downside? So do we expect the market to turn here, or do we expect a little more downside overall? What are you guys thinking? Do you think this will have more downside, or is the general consensus this is the turning point? What's the overall consensus? More downside, or is this the point that it's going to turn? Because if we look at this, we had a nice run here, which we talked about this being the upside. We had a nice little run here, which we talked about being the upside. This here we talked about potentially being the upside, and now this one here. Which probability will tell us is that again, that this is still going to continue going down. Because the overall market is going down, so, but eventually we will be wrong at one of these particular points, and it will continue going. I hope it is the start of the new normal, steady go up. But I very much doubt it. With what's going on in the likes of Ukraine, with the new sort of Russian impetus at the minute, with what's going on with oil, with potential recessions across the board, I don't see this turning around right now. I don't see this turning around right now. Someone said pandemic to be back soon. Yeah, well, winter will be in lockdown again, I'd imagine, with cold and flu season. But there's nothing here indicating to me that this will continue. Energy stocks are a good price rise coming up in October. Absolutely, yes. You have energy stocks that are doing quite well, but as a general rule, the likes of all these here, not ready to turn at the minute. Now, but what we could be doing is you could be dollar cost averaging into these stocks. So once we look at the stocks that we have here, so clear all the drawings, we look at what we have here. We look at what has happened over the market. We look at the likes of Apple. So Apple has dropped from the high down to here was 30%. It's now had a mini revival. But again, if Apple drops back down to 30%, do we think that is a good place to buy it? You could be thinking right now is a good place to buy it. Or wait for a double bottom. So you put your entry somewhere around there, the 130 mark. Do we think Apple will recover? Well, if you think Apple is going to recover, have you dollar cost averaged in? Have you bought some more stocks? I just said the new iPhone is coming up soon. I don't know what you've read it, if anyone has read anything that's come out. Apple have launched their new tablet slash laptop. So they've integrated sort of the iPad and the laptop together. And they also have a new phone. They have also are revamping the iPad. So they've done a huge change, or well, according to their advertising, a huge change across the i networks and the i products, if that makes sense. So it'll be interesting to see what happens, whether people are jumping out of their chairs to go buy it, which I expect people will. So they have released a few products, so it'll be interesting to see how the market reacts to their products. Facebook again has also dropped by about 30%, not more. Is that the high? Nope, up there was a high. So Facebook is down 55%. Do we think this will turn around? Is this now giving us a little bit of value? It'll be interesting to see what happens in the earnings. Are we better off waiting for the earnings to come out before we invest? Or do we invest before the earnings come up? So in 1 month's time, we will have the earnings come out on the likes of Facebook, Apple as well. Earnings is on the 22nd. Amazon. So Amazon has sort of had a triple bottom here. So we've had a triple bottom here. And it's bounced off here 3 times. And it seems to be, once it gets to this point, there seems to be a little bit of a level of support at that point, and I can see now why. Remove horizontal. People tell me all the time, oh, Henry, markets don't react to levels. They don't. Well, there's one there. Didn't even know there was a level back that far. And look, bounce, bounce, bounce. Come back, and it's bounced 3 times again. So after the split happens, it had a huge drop off. And then we had a buy up again at that particular point. Did anyone buy any Amazon at the split? Did anyone buy Amazon with the splitting of the shares? Does everyone know what the splitting of the shares are? Does everyone know what that is? Is there anyone here that doesn't know what it is? I do. Don't expect me to explain. Okay, so I'm going to make a very, very simple explanation here. Okay, so imagine a stock price was $2,000 and we are splitting the shares in half. So what happens is we're dividing the price by 2, which is now each one full stock will now cost £1,000. Whereas yesterday, one full stock would have cost you £2,000. So just say I bought a stock yesterday and John bought a stock today. So yesterday, my one stock cost me $2,000 and today's John stock cost him $1,000. So we're buying Amazon. So it cost us $2,000, cost me $2,000 yesterday, and it cost $1,000 today. What is after happening is I've now been issued another stock. So instead of having one stock for 2,000, I now have 2 stocks for 2,000. So they've issued me one more unit. They've issued me one more stock, and they've just reduced the price. So John, who bought one today, has one full stock, but I now have 2 stocks. So basically what they've done is they've halved the price. I've done here is I've halved the price and I've issued 100% more stocks. So anyone who is an existing shareholder, every £1,000, I have to give them one more stock. So if they have £2,000 worth, I have to give them another stock. If they have 20,000, I have to give them 10 more stocks. So that's the idea behind it. Now, if we'll go back and do some simple maths again. So just say it was 2,000 and we're dividing this by 20. So now I bought a stock yesterday. That was £2,000. And the splitting of the shares happened as a 20-to-1. And then John bought a stock today and his one cost him 100 quid. Now, does that mean that I still only have one stock? No. Today, they're after issuing me 20 stocks. Because now the value of each of those stocks have depreciated. What they've done is they've added more stocks, which means then that John has bought one stock for 100 quid, but I spent £2,000 yesterday, and it means now today I actually have 20 stocks for 20 shares. Okay, so that's the idea. That's literally the idea. It's simple maths. It's one has been divided, the other one has been multiplied. So it doesn't mean you have less or more. Does everyone know why they have split the shares? Does everyone understand why Apple, who's done it lately? You have Apple who have done it in the last 3 years. Apple have done it twice. You have Tesla who have done it. You have, I think, Microsoft done it in the last couple of years as well. You now have Amazon. You guys understand why they've actually split the shares? Okay, so a lot of us trade with eToro. Now, one of the beauties of eToro is that you have fractional shares. So which means then you can go and, I think it was 50 quid. I think you can now buy a little as 10 quid on eToro now, but I'm not 100% sure. But you used to be able to buy a stock for as little as 50 quid. And it meant that eToro themselves, instead of selling you a full stock, they would get loads of people around. NVIDIA, yes, they've done as well in NVIDIA, which means then that they would sell you a fraction, and then they would sell another fraction to someone else and someone else. And and eventually the full stock will be sold in full. Okay, so fractional shares. But a lot of brokers don't do that. A lot of brokers give you the pink slip, which is the actual ownership of the stock, which means they cannot sell you a fraction of a share. Cannot sell you a fraction of a share. So for instance, if we have stocks there that are £2,000, you're a new investor and you're using another broker that doesn't give you fractional shares, you first step into the market. If you want to have Amazon, you have to have $200 or $2,000. Now, if you're dipping your toe into the market and you now look at as Amazon, you go, oh, yeah, Amazon is really cheap. It's now at $113. It's much more appetizing than Amazon at $2,000, isn't it? People go, oh, wow, that's cheap. I've had loads of people going to me, what, Apple? Apple's at 100 quid? Oh, that's super cheap. I'm going to get some now. The price of the stock is absolutely irrelevant. Why? Because it's been diluted on the stock. Why? To give people the impression that it is cheap and affordable. That's why it does it. Because the market is massively driven over the last 3 or 4 years by retail traders. So we've seen a huge uptake on retail traders. That's why the splitting of the shares is so common now. Why? Because it allows uneducated investors to get into the market very easily. Now, again, this comes into the theory of whether this is right or wrong. But they're making it super simple for investors that have no idea of the markets to actually trade. But that's a different topic for a different day. So that's what the splitting of the shares now. What it does historically is it generally gives each stock a boost. So we can see here that Amazon, they knew the splitting of the shares was happening. Look, it jumped from here to there, which was 27%. Now, I understand that the market went back, but in a normal market, that would just continue going. And we'd probably see that same movements go up to about there somewhere, $160. Why? Because it's good for the market. It gets people talking about it. It's publicity. You have new investors in, and it drives the market cap up of the company. So in a roundabout way, this is super good for stockholders and for shareholders. It's all about driving the price of that particular stock up. That's basically what it's for. And it works. It works really, really well. The only reason it hasn't worked here is because the market, across the market, has been down. That's why it hasn't happened here. But again, Amazon, is this one a good buy now? What is it? Dropped from the high here, 44%, a little jump, so 40% down. Do we think that Amazon is cheap at 40% of a discount? Microsoft for me is very similar to Apple. We had a 30% pullback on it. It's 24% down from the previous highs. Do I think this will continue to go up? Absolutely. Maybe my two ones that I will hold on to sort of long term is Apple and Microsoft. They're just absolute juggernauts that will continue to grow, in my opinion. So should we be dollar cost averaging into them? In my opinion, yes, absolutely. I don't see any reason why not. And if it goes down another 20%, brilliant. buy up some more of it a little bit lower. If it goes down to $200, that'd be amazing. Buy up a little bit more of it every time it goes down. Google. So Google had a pretty big drop, and it seems to have sort of hit the floor there around 2004. So there's sort of an example. Okay, so 2004. So just say you have, so there it is, 2,332 quid for a stock or one share in Alphabet and Google. Whereas you can go to Amazon, which is bigger than Alphabet, bigger than Google, and you can buy one share for 113. Now, as a new investor, you will probably pick this one over Google simply because of the cost of it. Simply because of the cost. So what about Visa? All bank cards are starting to replace Visa cards to MasterCard. Well, I have both. And we got it here. Let's see. And it has been pretty flat. It's been pretty flat over the last sort of 2 years. Visa hasn't really gone anywhere. From the high here down to the low, seeing a 26% drop to where it is now today. It is only 20% down. So it hasn't really dropped like the other markets have dropped. Now, also the question will be is, with inflation continuing to rise, will this be good or bad for the likes of Visa, MasterCard, all those credit cards? Will it be good or bad for these companies with not inflation rising, with interest rates rising? So Jose said good. Anyone else? What would your consensus be with interest rates rising? Good or bad for the likes of credit cards? Now, we're not talking about banks. We're talking about credit cards, because these are credit cards. So we can look at this twofold. You can look at this in the sense that it will be hard for new people to get money. So with the interest rate rising, it means that it's hard for you to get money. So it means then that new customers coming in, it will be harder for them to get the accounts. But like someone said there, that people use credit cards as cash, which means it's the interest rate that they will be paying back will be higher on that money. So which means then that from the clients they are using, yes, you will be paying back higher interest rates, which means you'll be paying them back more money. So this could have a good knock-on effect for them, for the existing clients they have, but for new clients, it will be harder for them to open up an account. So long term, probably negative. Short term, it could be good for them. Again, it's something we have to keep an eye on. Visa, MasterCard. Again, pretty flat across the board, hasn't really changed. But if you're a little bit unsure about them, If you're a little bit unsure about them, make sure and do a little bit of research. What historically happens when interest rates go up? Is it good for the likes of these credit cards or not? And then the last one then is Amex. Does anyone know the ticket for Amex? Yeah, I've just got it up on my, just as you right now, I got it up on my account. The XP. And Amex has dropped actually a little bit more than the other two, which I actually didn't expect. And it's now 26% down. But again, it has a dividends coming out on the 30th. So anyone who has Amex, you have a dividends coming, and their earnings are coming out on the 22nd, same as the others. But again, if we look at the trends here, it hasn't dropped anywhere near as much as the other ones. So there is a little bit of money moving into these, and it looks like it hasn't had the same downside as the tech. But if you compare this to banking, so if we actually just compared like this, what did we say? 24% was on the other one, and this has dropped 30%. So around 24 to 30% we've seen on the likes of these here. But if we put in Goldman Sachs, look at the drop from the high we've had on Goldman Sachs. 34%. What other one we were on? Morgan Stanley. From the high here. Again, 34%. Wells Fargo. I think this one didn't drop as far. No, actually did. %. So we can see that the banks have been hit much harder than the credit card companies. So that would tell me that the credit card companies are faring much better at the present moment than the likes of the banks. So if you're looking at the sort of the banking industry, this may be a better bet. But if you're looking at the growth, the bank's growth was much better than the actual credit card companies. If that makes sense. So someone asked, what about Google's splitting of the shares, which is happening on the 18th of July. Now, if we look at the example of Amazon, so Amazon's splitting of the shares was on the 6th of June, but when it got to this level, say the 24th, so about 10 days beforehand, the market started taking off. So what we could do is, if you're looking for short-term returns, the 18th, if we get a pullback here on some of the indices, if it gets back down to this area, I would expect people to start buying this up in the next 10 days with the splitting of the shares in mind. But would I be looking to buy the stock right now with the splitting of the shares in mind? What would you guys think? So if we're looking at Google here, the splitting of the shares happens in 20 days time, 22 days time, would we be looking to buy it here? The answer to that is no, absolutely not. I would let it go. I would let it do what it's going to do. Now, if it came back down into sort of this double bottom here, if it come back into this area, is there a cheeky little buy there? Yes. But then it comes into question, are you looking to hold on to that stock then long term? Or are you looking to get out if it hits this area here? So if it bounces, so if it comes down to here, we buy it, then it goes back up to there. Do we exit or do we hold on to it long term? That depends on you and what you're looking to do. Okay, so that'd be sort of a decision you have to make when that comes along. Let's have a look at some of the energy. So we were talking about about 2 months ago or a month ago, we were talking about end phase as a trade, and it was trending quite nicely. We sort of took this trade here, we got triggered in and then triggered out quite quickly. It then come back down, and it didn't come back down to this level here, and then it took off again. We've had a phase 2 and now a phase 1 again. So it'll be interesting to see what happens. Are we now going to get a higher high here? And then if it pulls back and hits that level, if it pulls back and hits that level, might even bring that level down a fraction. Right there. Be interesting to see if it breaks and retests, or will it hit its head and then come back down again? They're the two sort of possible scenarios: hit its head and then come back down again. Somewhere into about there again. Now this has had a pretty big drop. We were looking for it to come back to here, and bounced up quite nicely. And then all of a sudden it is dropped like a stone. Now, if we look at just the earnings, the company's actually not too bad. We do have some negative earnings every so often, but the company itself is not doing too badly. It has come back into sort of that level. It's double bottomed. Would I be looking to buy it here? Probably not. For me, we've sort of missed the trade, we've missed the boat. So it's not something that I would be looking to jump in on now. AutoNation, similarly, come back here to this level, double bottomed, and then sort of took off again. Now we do have this sort of horizontal going on here, and we want that to continue going up, probably to that high. I want that to go up to that high and then come back to this level. Whenever it comes back to that level, then we could actually have a potential trade on this. So AutoNation or AutoZone is something that we could be keeping an eye on for a potential trade, depending on what happens over the next couple of days slash week. Again, this has had a pretty big sell-off. Nothing happening there. Same. So well done, anyone who took this trade. Come back down, hit there, went up, and hit our take profit on this one. It come back here again and double bottomed. So anyone who took this as a double bottom again, look, we've had a really nice run. Now the question is, at this particular point, is how far are we expecting this to go up? Are we following the trend and expecting it to go further? Or are we expecting it to hit there and then come back down? What's your plan for this particular trade if you took it? And that's the thing. We have to have a plan in place if we're placing a trade. It has to be there. Oxy. So Oxy's now come back down into a level again. Oxy has come back down into a level again. Come back down into this area, and it's identical entry to what was there previously. It hasn't come back down to here, but if we look at the pre-market, we've had a nice little jump on the pre-market, haven't we? The market has jumped from 58.90 up to 61.40. If we look at the likes of that, can you guys still hear me? I don't know whether the screen is frozen or my mouse has stopped working, but it's not moving. Come on. Now we're working again. I don't know what happened, just the mouse just stops. The mouse just stopped working. Okay, so we've the market at 59 or 58.90, and then we have the pre-market at 61.44. So we have a pretty nice little jump on this one at the moment. Again, we have earnings coming out in August. With what's going on, do we expect earnings to be good or bad? We expect our earnings to be good or bad? Do we think that this would be a potential buy on this particular stock? It's absolutely come down into a level. Yes, we have it a few dollars more expensive than where we wanted to get it. But if it reaches the previous high again, which I expect it to do, is 25% growth. Now, obviously, we have the pre-market here. So up to the high from the pre-market is 20%. But again, it's the earnings. I expect the earnings to be very good again. And the same with most of these energy companies, whether it's oil or gas or whether it's energy. So this one has had a pretty decent pullback. And it's almost back at this level here. Now, obviously, I don't know as much about Marathon Petroleum as I do about Oxy Prudential. But again, is this a good level to be jumping in on this? Earnings again is coming out on the 22nd of June or July. Sorry, 2nd of August. Do we think that this is a good place to be buying? And do we think this is a good place to be buying? Looks pretty decent. Same with this one. Pioneer Natural Resource Company. It's come back to that horizontal. So we are getting some of these companies that were doing really, really well coming back to really nice levels. Again, I don't know huge amounts about this company, but again, is it something that we should be investing in? Okay, EOG Resources. Again, come back to this nice horizontal. Accenture, not as much. Accenture had its negative earnings, which it actually missed by 2.33%, which was actually a bit of a surprise to me. But as a general rule, this is a really well-run company. United Health Group. Did anyone take that off that horizontal? A really nice level back here. Hit the level, bounce straight up. It's now hit that. Toyota. Is Toyota a good trade here? Not massively. The one company that I've sort of been reading about and electric vehicles and people are backing it strongly is Volkswagen. For electrical companies. What is Volkswagen's actual ticket? VOW3. VOW3. Volkswagen AG. Let me go with this one. A lot of people are backing Volkswagen for their electrical vehicles. I've just read a little bit about it. They seem to be looking to flood the market with electrical vehicles. Now, again, is it a strong trend? Absolutely not. Absolutely not. But their projection for the next 3 years is to be the top electrical vehicle producer in the market. So is the trend correct? Is it something we'll invest the trend? Absolutely not, no. But what I'm reading is and seeing, but again, obviously this is someone else's thoughts. Volkswagen is going to be the leader in electrical vehicles. Ford again has dropped back down to this level. We talked about potentially shorting it at this area here. So anyone who shorted the market at that particular point had a really, really good time. And it went down to a 7.3 to 1. So well done, anyone who shorted that off that break and retest. Okay, everyone, it's been an absolute pleasure. Thank you very much for jumping in on board. And anyone who can't make it live, obviously, on YouTube and watching it there, well done. Thank you very much as well for jumping in and supporting. But look, everyone, it's been an absolute pleasure. Thank you very much for jumping on board. If you want to listen to my other webinars, which is every Monday and every Sunday, or every Wednesday and every Sunday, just jump on the links either on YouTube or the links that James has popped here, or the links in the Discord chat group, and we can get you into the main group. All right, everyone, it's been an absolute pleasure. Thank you very much. Hope you have a lovely evening, and I will speak to you tomorrow evening.